TWOX Ether ETF arrives in US, stealing spotlight from traditional spot options. Shalini Nagarajan last updated, June 6, 2024 to ETHT 1-minute read. US investors can now access funds that track double the daily movement of Ethereum. However, a spot Ether ETF still awaits full regulatory approval. Volatility Shares launched ETHU, a TWOX Ether ETF, on June 4. This offering targets daily returns that are twice Ether's daily movements, but before fees of 0.94%. Meanwhile, ProShares announced plans to list 2 new ETFs on the New York Stock Exchang on June 7. One ETH will target double the daily gains of Ethereum, while the other ETH will do the same for price drops. These ETFs can be traded because they do not directly invest in Ether. Instead, they utilize derivatives such as futures contracts to fulfill their investment goals. Approved spot Ether ETFs need final registration before trading. ETHU launch comes shortly after the Securities and Exchange Commission SEC granted its initial endorsement for 8 spot ETFs that directly invest in Ether. The SEC's approval of these ETFs comes just 4 months after the first Bitcoin ETFs were greenlit, showcasing a swift change in regulatory stance. Notably, #X was the only applicant not approved in this recent wave. Even though these Ether ETFs are initially approved, the exchanges and providers need to clear a final hurdle. They must file registration statements with the SEC, providing investors with crucial details about the product. Bloomberg ETF analyst Eric Balchin predicts a potential launch for these Ether ETFs by mid-June. He anticipates a streamlined approval process similar to the recent Bitcoin ETFs, with just one round of regulatory feedback needed. Follow us on Google News.